June is National Homeownership Month.
That means buy a house with a pool.
Who told you that? That's not what it means. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. So this week what we're talking about is the month of June is National Home Ownership Month. It was nominated as that years ago by the previous administrations, and each administration since has improved upon this. It basically means that every American has the opportunity to own a home and is given the opportunity to own a home. Doesn't mean that every American qualifies to buy a house, but that's some of the stuff we're going to talk about.
So June being National Homeownership Month is an entire month of celebrating. And it's about an awareness. It's about the dream of home ownership. And yes, you're right. Past administrations.
I'm being very politically correct.
Thank you for being politically correct, DeLynn. And really promoting home ownership, because it is the national, it's the dream of most people to own. And there's a lot of things about home ownership that proven time after time that it's really a better lifestyle, and people that are in those situations are actually in a better position in life. So the National Homeownership Month's all about thanking all the people responsible who make that possible. Our realtors, our financial institutions,
our title companies,
home inspectors, everybody that makes it happen. So,
and there's a lot of people that make it happen.
Yeah, so we're going to talk about the process and where do I begin? Like, I want to be a homeowner, but we want to tell you some of the benefits of home ownership that you may not even think about. Why do you want to own versus rent? And it's not for everybody. We know that.
And that's what I was just going to say, and everybody needs to understand that too. So the fact that they have said that everyone has an opportunity to own a home, which means everyone has the same fair shot, so to speak. Everybody has the opportunity to do so. Not everyone can because of their particular situation, and that's what we're going to talk about. Putting yourself in the right, lining yourself up properly to be able to buy a home.
And educating yourself. So there's a lot of HUD classes.
Yep. There's a lot of false stuff too, though. On the internet. You want to be careful.
Get in a certified class.
Right. I think a lot of people get very confused. I know and I'm sure you talk to a lot of people as well. They're very confused when they call. They're like, well, I read this on the internet, and I read this on the internet, and my mom told me this, and my dad told me that, and there's so much confusion out there amongst
plumbers and electricians can be great resources for your
I know. Yeah, my electrician said this.
I know. And I love electricians and plumbers, don't get me wrong, but we don't want to, hey, you don't recommend we stick our fingers in an electrical outlet, and we don't recommend you teach people about the home buying process.
That's right.
Because things change every day. Maybe you bought a house a couple of years ago, but the industry is not the same, especially now with COVID.
Yes.
Wow, we're going to talk about guideline changes too. Just because of COVID, it's crazy every day, so you got to be on top of it. So, but let's talk about some of the benefits of why maybe you want to consider homeownership versus renting.
Before we get to the how do you go about
how do you go about it?
So just some of the benefits, and obviously everybody knows.
This is my number one reason.
Okay.
This is a national statistic from the Federal Reserve. The net worth of people who are homeownerships is 36 times or more higher on average than someone who's renting. To me,
difference.
Yeah, that's a huge difference, and it's about that stability that you get with homeownership. You are building equity in yourself. You own versus rent. When you rent, you're paying someone else for the privilege to live in their property. When you own, you're actually paying for your
You're
own.
investing in yourself and your family.
And you know what?
And your future.
And I'm going to tell you this. People look at their mortgage payment statements and they say, oh, only $100 a month is going towards principal. Well, let me let you in on a secret. You don't make money in real estate by paying your mortgage. It's really about owning it, because you make money when the market appreciates or depreciates. You lose money, of course. But if you own a home for the long term, you're going to make money, because if you look at the history of the price of real estate, it goes up every year. I mean, look at the prices of housing now versus 5 years ago, 10 years ago, 20 years ago. You know, if you would have told me.
And back then, they never thought that they would be worth what they are today.
You can't find a house for under 100 grand now. It's not even out there. But, you know, think about.
Not in our area.
No, they're just not out there. And there's so many other things, you know, that.
Some of the things that I think are very surprising statistics, and keep in mind, these are not our opinions. These are things that were researched, and I think this goes to the stability of owning a home, and it has to do with your children and such. They have found in these surveys that they've done lower teen pregnancies.
So homeownership promotes lower teen pregnancy.
Right.
Because that stability of home.
Exactly.
You're less likely to move.
I thought that was very interesting.
Yeah, so you're
Right.
not jumping around. You have that stability.
And these are the few on the children. Do you want to?
Sure. Higher graduation rate. People who own homes actually statistically have a higher graduation rate of students.
And higher test scores of students as well.
And people who own homes are more likely to participate in extracurricular activities.
The children,
at home.
right.
Yeah, I mean,
So-
that's great. That's good for fellowship. That's good for
I was surprised
socialization.
Yes, I was very surprised at those, you know, how it affects
and
the
it may
children
be the
and
fact
such.
that, you know, when you rent, you move, your lease is up, you move.
You move.
You're
That's hard on children, you know, because, you know, children they need roots, they need grounding, because if they're moving to a different school system all the time, having to remake friends all over again, that's hard. Think
Yeah.
about it. I mean, it's hard I know a lot of our audience is realtors, and most of the time us people like salespeople, we don't have a problem talking to people. But when you're a child, and if you're not a sales type person, you have a problem talking to people, and having to go from school to school to school to try and make new friends again, that's very difficult on children.
Well, the other thing that, you know, may or may not help you is the tax benefits of mortgage interest for a lot of people, especially our realtor friends, because you're all self-employed. You know, rates are super low right now. When you tax adjust that rate, think about it. If you're in a 25% tax bracket,
Right.
you know, that's a huge, you don't see it when you pay your mortgage, but when you do your taxes at the end of the year, you're either paying less taxes, getting a bigger refund just for the fact that you
Right.
own a home. And the other big thing about it is rents go up for most people, they go up every year.
Yep.
You want that stability. You might say, oh, I can't really afford that mortgage payment. Well, your mortgage payment is going to stay the same for 30 or 15 years, whatever term you pick. You know, your insurance may go up, your taxes may go up. And remember, we have the caps here in Pasco County, and a lot of counties in Florida do have those Save Our Home cap. So think about locking in a payment for the next 30 years. You know, where are you going to get that when you rent? You're not. No. You're just not. Rents are going to go up. Landlords are going to raise your rent.
And, you know, I've heard so many people say things like, yeah, but, well, you know what? What about, you know, if the water heater breaks, I have to fix it. If the air conditioner breaks, I have to fix it. Whereas if I'm renting, then they have to fix it.
Because
they're fixing it with your money.
Exactly. You've already overpaid them to do that, you know.
You did pay for that.
You know what? A lot of times right now in the current market, because the rental market is so hot, you can actually own and have a
lot cheaper
with a lower payment than renting. So, and I understand, you know, if you have a job that requires constant relocation, but you know what? Under COVID, we're learning that people work remotely very efficiently.
Right.
You know.
Right.
It's true. It's true. You know, there's some benefits to it. So how do we get started? now that we know that June is National Homeownership Month, you're ready.
And all the benefits to owning a home.
Where do you get started? How do you
So
begin?
many people out there, some of the statistics that they were talking about, we all know, like our millennials and things like that. I have to put my glasses on for this. Okay. So homeownership rate in the United States is 63.7%, which is pretty good. It says at least each state is at least 50%. Their homeownership rate is at least 50% for every state, which is nice. The average first-time home buyer age is about 33.
Interesting.
Which is kind of at the top of the millennial. That is the average first-time home buyer. So they're not buying in their 20s like we all think of the millennials in
They're
their
living at
20s.
home.
They're staying a little bit longer.
Yeah. Where are your kids?
And you know what? They're educating it. I know. And they're educating themselves a little bit more.
Yes.
They really are. But this is the other one a statistic that I thought was pretty interesting. 80%, approximately 80% of Americans age 65 and older own their own home. The 65 and older crowd has the highest home ownership rates of all age groups.
That's important to know. I mean, those people started owning a home many years ago. It's so funny too, because we're seeing this right now. We have quite a few seniors in our pipeline that are refinancing.
We do. And buying. I got to tell you, I have a purchase right now, and the gentleman is 88 years old.
And that's awesome. And I hate to think of your home as a piggy bank, but we have seniors that maybe didn't put away for retirement, and some of them are refinancing now to get a little cash out, and they know they're never going to pay off their mortgage. So really, who cares? Their kids don't care.
Well, and with mortgage rates so inexpensive.
Yeah.
Right? The 88-year-old that I have buying a house, first of all, one thing that I do want to mention as well, because this is important for people to know too, the first thing he thought was he can't buy a house because he's 88 and I can't give him a 30-year mortgage. Guess what? That's called discrimination.
Yeah.
Absolutely, I can give him a 30-year mortgage. Even though he's 88 years old, we
Doesn't
cannot
matter.
discriminate.
We don't care. We don't
And
care.
that's a federal law. You cannot discriminate due to age. But
Many
the other
other
thing
things,
is,
too.
the man has plenty of money to pay cash.
Right.
He could pay cash for this house. But he doesn't have a lot of write-offs. And with the interest rates being so low, he's going to get a mortgage on the house.
And it makes sense
Because it makes sense for him.
why not hang on to your cash?
Right. Hold on to that.
Because you know what? Once you put it down, you can't get it back unless you refinance or sell.
Right.
Cash is king. If you can borrow at 3 and even earn 3,
Invest
you're
it.
ahead.
Right. Exactly.
If you get more,
that means
it's
your
great.
mortgage is free.
And when you become ill, you need cash, you have it still.
Right.
Cash is king.
Right.
I always say to people, would you rather have $100,000 of equity in your house or $100,000 in cash in your hand right now?
That's right.
And they look at me and they go, well, I'd rather have cash in my hand. And I'll be
Right.
like, well, why do you want to pay cash for the house then?
I know.
Because that's what you're doing. You're telling me one thing, but your feelings are different,
I know.
But anyway. All right, so all the benefits of homeownership.
Right.
Lower insurance rates, another one.
Right,
that people don't
exactly.
talk
We didn't
about.
even
Your
right,
car
mention
insurance
that one.
rate, because you are more stable.
Right.
We know that you're socially going to be stronger. Car
Yeah.
insurance rates, it's another reason. All right, so now everyone is convinced they want to own a home. Where do
Okay.
they get started?
How
Where
do
do
you
begin?
start? Right.
How do you start?
Because there's so much information out there that is not correct.
Yes.
Or just some of, and a lot of the information out there can be very confusing to people. There's, different programs, and can I do this, and can you do that? And it is changing every day. Barry and I have been doing this for 100 years.
Well, 200 now,
Perhaps it
because we're
just
older.
Perhaps it just feels like that.
Yeah.
But really, we have been doing it a long time. So one of the very first things we want to talk about is I think the home buyer education classes are wonderful. They are a requirement if you're using any of the down payment assistance programs that some states have available. But even if you're not using the down payment assistance, take a class. They're very good. They talk about budgeting and things like that. So I think that's where people should start.
Yep, they should definitely start there. And I would say the next thing is know your credit score.
Right.
Without good credit, you are not buying a home, especially right now during COVID. There's less money to borrow right now.
Right.
There really is.
Right.
The pool of money is limited. If you're not and I'm not saying you need a 700 score to buy a house. You
Right.
can go down to 640, say. Some cases may be lower with exception, but if you're not above a 640 middle score, you're probably not in a good spot, and you need to get with somebody to help you get your credit up, or start working on that. That's the first place I would look at, is credit. And then
Because it makes a huge difference, and that is something that has changed a lot over the years as well.
Yes.
So don't think because you took that class 2 years ago or 3 years ago, oh yeah, and I know I'm fine. And sadly, I have people calling me right now, and they have like a 591 credit score. Well, I thought you can go down to a 580 credit score.
Well,
No,
not today.
The world changes.
if you don't
So-
like what we're telling you, wait a minute.
Wait a minute.
And watch next week's
It's
show.
gonna change.
Because it changes every week, every day.
does.
Yeah.
It does.
So I think the other thing is, get pre-qualified after
Well,
you know your credit score.
Right, and on the credit score thing, you can absolutely positively get your own credit report. It
Yes.
is not freecreditreport.com.
No, because it's really not free.
Because freecreditreport.com is not free.
Yeah.
It's called annualcreditreport.com. Annualcreditreport.com. Each of the 3 repositories, Equifax, TransUnion, and Experian, will give you your credit report for free
Yes,
once a year.
once a year, yep.
And we highly, highly
And
recommend
you know
you
what?
do that.
You don't get your score with that, but you get your actual report. You can
Right.
pay an additional fee to get your
to
score.
get your score.
Credit Karma is a place you can actually get 2 of your scores,
And
that'll give you an idea where you
It's
are.
just an idea. Keep in mind, it is just kind of a snapshot of where you are today.
Yeah. So once you know your score and you think you're good to go,
Mm-hmm.
maybe get with your lender, a good local lender.
Mm-hmm.
I just can't say it enough. Get with a local. I enhance local because every
Right.
market is different. If you're working with a California out-of-state lender, and I don't want to pick on California, but they're 3 hours difference in time. When you need your person, they may not be available.
Right.
Excuse me, just saying.
Not only that, and again, I'm not picking on any of these large,
Yeah, get
on
somebody small
the
that you
one on
can
the
communicate
TV
with.
who advertises all the time and everything. So I had a client just call me yesterday, and I went through it, and he said, blah, blah, blah,
Yes.
qualified me for $275,000. And I said, really? He didn't qualify for $275,000, and I knew exactly what it was. After I went through my qualifying and I asked him the questions and everything, I said, "Let me ask you something. Did they ask you about your child support?"
No.
He said, "No, they didn't. I
Yeah.
did."
Yeah,
That made a huge difference in what the man qualified for.
sure.
So,
It does.
local,
Local.
good people.
Now, next thing I would say is come up with a manageable budget. What you qualify for and what you want your actual mortgage payment to be, because remember, they may be totally different. You might make so much money, have low debt, and qualify for $2,000 a month and a $500,000 house, but maybe those numbers are probably totally off, by the way. So don't write those down, please. But maybe that's not your comfort zone for payment. Maybe you're somebody that likes to go out a lot. Maybe you do a lot of extracurricular
Maybe you have
activities.
children and you're paying daycare,
Yeah, so-
and that's money that goes out of your pocket.
And those
so-
don't count into your debt ratio,
Right.
remember. Only what's reported on credit is actually what qualifies you on the lending side.
And so you know what I always ask people, I know you've heard me a million times on the phone, and I always say to people, because this is like true, what you qualify for and what you're comfortable with are 2 different things. Like Barry said, so for example, daycare, we don't take that on a mortgage side, we don't take that into consideration that you're paying daycare. However, that's real money. I remember when I was paying daycare, that is real money going out the door every
Yeah.
single week.
And it's not cheap, folks.
And it's not cheap.
Well,
so
we know.
you want to
Our
set a
moms
real,
and dads know this.
That's right.
They
you
probably
want,
know more than us right now.
You want to set a manageable budget, which goes right along with definitely set some realistic financial goals. You don't want to buy over your head.
That's important. So come up with a number where you
And
want
if
your
you've got a
payment to be.
10-year-old car right now and you know you're going to be needing a car pretty soon,
Yes, yes.
don't go to the tippy top in a house payment,
And
because
don't
then
go
you
buy
won't be
a
able to afford that car.
Don't go buy a new Lexus when you're buying a house either. That'll probably affect you.
Yes, don't buy anything when you're buying a house. That
Yeah.
changes things.
That's a whole
But
nother
again,
show.
it's realistic financial goals that you want to put together and a realistic budget. And you have to consider all of that when you're looking to buy a house, because you don't want to get in over your head.
All right, so now you know your credit score You got all the documents together. That's a whole checklist in itself, like bank statements, pay stubs, W-2s, tax returns, all of these things, and you're pre-qualified. So what do you do next? Well, you need to find a good power partner that's a realtor. Many first-time home buyers think that they have to pay for a real estate professional. You do not pay for a real estate professional. The listing is what funds that realtor commission. The buyers do not. You need to find a local, good person who knows the market that really has your best interests at heart. Yes, that's a shout out to all my realtor friends out there. We want you guys to be helping people achieve the home ownership dream. I mean, it's essential because they can educate you on all the different things on the cost of home ownership, and they know neighborhoods, whether there's a CDD involved, that people look at price points
What's
only.
a CDD?
Yeah, that's a whole nother animal that adds to your payment, that goes on the tax roll, that can affect, even though it's a $200,000 house.
That's something attached to the taxes in some houses.
Yes, so a lot of your newer communities, even though it looks great that this house is only $200,000 and it's brand new, you know what? You might qualify for $250,000 outside of that neighborhood because it doesn't have a CDD. HOA fees are a big part of your monthly budget too when you're considering it. Is it in a flood zone? So what is the homeowner's insurance? So your next power partner needs to be not only a realtor, your lender, but your insurance agent. If you're not getting with an insurance agent that can help get you quotes on properties you're looking at, you're not, what is your whole payment? That's the thing.
Right.
So,
And you know what, your realtor and your lender work with these people every single day, and they can help you with things like that. They can help get quotes for you on insurance and things like that. And then when you do go in to buy a house, you're going to want to make sure that house is absolutely up to snuff, so to speak.
Yeah.
So another partner is going to be your home inspector, and that's the person who's going to come in and basically go through from the attic, I used to say to the basement because I'm from up north, but from the attic to the floor.
We don't have basements.
I know, we don't have basements in Florida. I've been down here long enough, too. Anyway.
You think you would remember that.
I know. They go through the entire house with a fine-tooth comb, and they're going to give you a report that has every single thing that's wrong with that house. And your job is to go through it and say, okay, I can live with that, I can live with that, I can live with that. Oh, wait a minute, I think we need, attention to the air conditioning system
Right.
or whatever. And that's where your realtor partner comes with you. Don't just, again, like we said, get these people, hire people that you like, that you're comfortable with, because they are going to help you get to your financial goals of home ownership.
You're going to build a whole team, basically.
Yeah.
All right. Now, the one thing we didn't mention when we were establishing that budget is how much can you afford to put down? That's an important part of home ownership. There's all kinds of programs out there. There are some down payment assistance programs. There's some 100% programs. There's some 3%, 3.5%, 5%, 10%, 20%. Your lender will help you with those different options. So when you do that budget, not only should be how much can I afford in my mortgage do I feel, your lender's going to tell you what you qualify for.
And not everybody
But-
fits into all of those
No,
programs.
no.
You might make too much money for some of the programs or whatever. So, and that's where your lender can talk to you about it and say, okay, you make too much money to get into this down payment assistance program, which means you need to save up on your own.
Yes.
Or we need to look at other
And
avenues.
I'm going to tell you, just from our experience, you're usually better off to not use the down payment assistance programs as far as the rate and that you're going to get. You're going
If
to
you
pay
can
a little
save
more.
up on your own.
If you can save up 3.5% and get an FHA loan,
Right.
that may be
And it looks better, to be
And you
perfectly
have to
honest with you.
consider-
And in the long run, it's better.
closing costs. You have to consider that too. And your good realtor will help you maybe get the seller to help you with closing costs if you don't have that. So
Right.
I know a lot of them don't like to hear that. Realtors hate to ask for closing costs, but we have to, as lenders, look at what's best for our buyer. How does it work better for them? So anyway, we could talk about National Homeownership Month for the whole month of June.
Clearly, we could go on and on with this.
Yes, we can, but we need to talk about just a quick touch on COVID-19 guideline changes for our self-employed
Right, because as you guys
buyers.
know, we've been trying to keep you up to date with all of the guideline changes. That's part of what we do. And since COVID-19, many things have changed, and some have gotten strict, and sometimes they've gotten lax. Okay, so on self-employed people, and this is a new guideline that just came down from Fannie Mae and Freddie Mac yesterday.
So it's not us, remember.
Right. This is agency,
Everybody.
it's called.
Everybody.
This is the entire country. These are Federal National Mortgage Association, which is what Fannie Mae stands for. And some of the things
Is that
that
what
they're...
it stands for?
Yeah, Federal National Mortgage Association. And
Wow.
Freddie Mac is Federal Home Loan Mortgage Corporation.
Wow.
Why do I remember these things?
give
I
up.
don't know. But anyway, doing it for 100 years. Anyway, so some of the things on self-employed, they are getting a little bit stricter on self-employed. Non-self-employed people, as you know, you realtors out there who have been to many closings, were getting pay stubs right up until the most recent pay stub right before closing. On a self-employed, it's a little harder to do that. So now what they're asking for is profit and loss, P&L statements, right up through 60 days of closing, and they're also going to look at the last 2 months' business bank statements to make sure that the deposits that are going into the bank statement are actually what match the profit and loss statement that was given to us. They never did that before, so this is Fannie Mae's way of seeing that, yes, they are still making...
So the days of just using 2017 and 18 right now, because
Right.
you don't even have
Tax
to
returns.
file 2019. Your business was good back then.
Mm-hmm.
So under the new guidelines, lenders are going to be making sure that you self-employed people still have cash flow coming in, you're viable. You're going to have to be making deposits into your business bank account.
And for the most part, I think that people will be okay with that. You
Yeah,
know,
but just know it's
showing
there.
It is.
So-
Little extra paperwork, just
But
be patient.
We're
That's what
going
we
to
ask
ask you for it.
Right.
We're going to ask you for it. And lenders, you know, those big box stores that you talked about earlier, you know what? They don't bring up those conversations early when
I
they
know.
want it self-employed. Like
I
you said,
know.
oh, you know.
They don't even ask the right. They
No,
don't even
they-
ask enough questions.
They get your documents, look at it, and say you're pre-qualified. I had one last week.
You forgot they run their credit.
Yeah, run their credit.
No.
Get some documents.
No,
They
the
don't
last
ask
thing
all
I'm
the
gonna do
questions.
is run the credit.
We're
I'm gonna
gonna
ask all the
dig-
questions first.
We're going to interrogate you to make sure you qualify, but you'll be happy in the end because the truth always wins.
Yeah,
right?
before running credit.
All right, real quick,
makes me
that's one
crazy.
update. We'll keep you updated on those. Lunch and Learn coming up. Our last one was a great success. Thank you, Mr. Mike Gallo,
Mike
for
Gallo,
doing that.
yeah.
It was awesome. We have the next one, July 14th. It'll be via Zoom. We'll get the link out to you. So make sure you watch that. We're always educating you. You know, you guys are our power partners, and we want to help you. And you know, we're all in this together.
We are.
Yeah, it's
That
fun.
phrase,
so,
but-
hey, so don't forget to share this show, like it, wherever you found it, forward it, get it out there. 'Cause
We appreciate you guys sharing and liking us and such. And tune in again. We are Today and Every Day.
moving forward. Have a great week, everybody.
Bye-bye.